Hey guys, Frank Cava, experienceinvestor.com. And last time we talked about rolling up our sleeves, we're back. And sleeves are rolled. So we talked about finding the right banks. We talked about getting past the gatekeeper, and we talked about going to the person in the commercial division and talking with them. So the dialogue that you have is similar to what we talked about before, right? You just tell them what you do, what you're looking for, and do they have an appetite, or would they be interested, or would they be willing to sit down with you? So in most instances, if you don't sound like an idiot, they're going to say yes and they're going to meet you. And if you've gotten to the commercial banker, they know you've gone through some level of screening because that you made it to them. You can't just like call the branch and they pick up the phone. So if you get that far, good. You're going to set up a meeting, or you're targeting a meeting. What do you want to talk about? First things you want to talk to them about, and you want to be prepared to talk about, are what it is that you do and what you would do with the money. In my case, I want to do basically two things with the money. I want to buy houses that I fix and sell, and then I want to buy houses that I fix and sell and turn into rentals. So why is that appealing to a banker, to a real banker, not a lender or a private lender or an uncle or somebody like that? I don't know if you know this, and I didn't probably 10 years ago, but banks really run on deposits. The more money they have in deposits, the more money they can lend. When banks get levered, like in bank runs or like what happened in 2006, 7, and 8, and they're levered at 30, 40, 50 times deposits, it gets scary. So what they want to have is they want money in their bank. If you have 100 grand in an account, or if that's a lot of money for you, you have $10,000 in an account, if that's still a lot of money for you, if it's $1,000 in an account, that's going to help start the conversation. If you have deposits with that bank, they're going to be more likely to lend. You need to have a plan. I'll open up an account with you, but I need money to do these things with. And they're going to give you some parameters. It's not their first trip to the rodeo. So they'll know, what they can and can't lend on, and they know what their bank's kind of guidelines are. So if you look at those types of, parameters and talk to them, you can build something around it. So let me just talk personally. Remember those big banks I told you that you wanted to avoid? Well, all of my money was in one, and I had, a couple of bucks to, shake around. So my banker kind of talked to me and he said, Frank, I'd be willing to open a line for you, and I'm going to give you a small construction line. And what that line is going to be is it's going to be a line, of X number of dollars. It's going to give you the ability to buy a house, and the upper tier was capped, and it was pretty low to start, just like we talked about before. The first loan out of the gate, they're not going to give you $1 million house. They want to give you $150,000, $250,000 house, where if they lose it, they can get most of their money back, and they can remain whole. So he opened a line for me. It had upper tier limits on the particular house. It's called the guidance line because it had kind of guidance around it. It had like a limit that it could be, but I could guide inside of it. It had a cap per house, as we said. And then very similar to what we talked about previously, it also had some parameters with each house, and then I would have to take out a specific loan with the bank for that particular house. So like we talked about before with recording the mortgage with deed of trust, the same thing happens with the bank. So I have a guidance line. I go and I buy a house, on Maple. That house on Maple then gets a note pulled, and then they secure it with that loan. Now, the difference between a bank and a private person is there's a lot more paperwork. I mean, when I say a lot, I mean a lot. Like 5A documents to like 50 to 60 documents. So it's cumbersome. They're going to go through an appraisal. They're going to do other things, and they're going to make sure that you're not bringing them a turd, and they're going to make sure they're going to get their money back. That's what the bank's going to do. But the upside is it's a lot less expensive. And if you want to turn it into a long-term hold and you build that relationship with the banker, you can. Most of my private lenders want their money back, and they want it back, in a reasonable amount of time, somewhere, between a couple of months to, a year or so. With bankers, what we talked about earlier is them having deposits and having assets. It's good for their bank. If they have assets, they can lend off of those assets, sometimes 20 to 50 times. So if you start to bring them assets and they securitize them, it's good. It gives them the ability to grow, their market base. I hope this makes sense. But the point of the matter is this: bankers are good. Communicate to them the right way. start a dialogue with them. And next time I'm going to talk about how to transition from being a transactional person to being a hold type of an investor or a combination of both, and where a bank really works in there. All right, guys, talk to you soon.